Good morning. Happy Monday. Markets are up already. And we're ready to go to the moon here. We shall see shortly. No. Qs led the way. Look, last week was looking at the Qs here. It was like, oh wow, what's going on, man? Pretty much everything was running in place or going down. And this week, do we play some catch up where maybe these Qs just keep going? Right? I usually think catch up when you have these underperformers, but we'll see what they do. You can see in the S&P here, they're up here a little bit, but you see on Friday, it just poked up there above the highs, but overall, it was just a sideways grind all week. All the bars were overlapping. We got a little top tail, we got a little bottom tail, and we got a little top tail, and just went out with a whimper. Oh, sorry about that. Charts. I'm going to get it right soon. There we go. Thank you, Alex. That's what I was talking about, the up down. Right? It kind of went up, down, goes down, got back up, goes to up, back down again on Friday. And today we've got this inside bar. And overall, we see things were just marking time going sideways, which is bullish since it was in this area of this prior high. And what we were talking about leading up there, for those that are new, was how this was going up bar by bar, never breaking a prior day's low. And then we had the break of the low here, and it came back up. And again, just holding prior day's lows until a little break here. And the commentary was, when we have retracements that are this shallow, it just makes a low probability reward to risk setup here, because look, your entry is here. If you just take it above the high of a prior bar's high is one way. Then if you say, I want a green bar, of course, you're even higher. You're right into the resistance. And essentially, you're up a little bit or break even and market, just running in place over here. So we'll see if this can get some elevation today, or go the other way. Who knows? Who knows? All right. And let's just look at the spiders first. Spiders. And it shows the measured move. I drew that a couple of weeks ago. Measured moves usually result in a slowing in momentum and some type of a correction. So far, the correction was a little bit of a downward move, and it popped right back up again, and the same sideways price action, which is neutral to bullish, and it needs to resolve itself on the upside. You see the weekly there, up a few weeks in a row, and typically it leads to either a pullback or chop sideways. And so, last week was a stalled, like a stall in momentum type of bar. And then it's like, hey, do we get the red bar down and where the momentum slows, and 3 bars up there? So 3 bars, and then it breaks versus 1 bar, and it stalled right away. So the thinking or thought process here when we look at the price patterns is, the more bars going sideways after a run, the more it must break to the upside. The meaning there is, or the interpretation is, that even though prices got extended, buyers continue to step up on very shallow pullbacks at resistance. They continue to buy a little less aggressively. Of course, someone was selling, or it would have went higher. And so now we're into the 3rd week, right? This was last week. And if it's a down week, all of these bullish buyers that we're accumulating up here on these very shallow retracements start to hit the bid. And that is the concept of a M top, in that initially it's bullish, but then it begins to unravel, where traders say, oh, this thing isn't going to go up. I better get out. I'm not so sure what it's going to do. So the other thing that we look for price patterns, and we look for particular events that tell us, okay, we've got something here that gives me an action point, which we don't have yet. What would an action point be? Well, an action point could have been if this morning, for whatever reason, prices would have gapped down significantly, and then by the end of the day, it was closing near the highs and into this consolidation, and that type of a correction bar. Let's buy it. Right, the gap down kind of removes supply, and then buyers step in aggressively again. Now, this was a little correction bar on Thursday, but so far there was no follow through to it. So it traded under the lows. So we'll see how today plays out. SPX, I have it down here. It's tricky. 47.45. Now, that's not too far away. And things are up here for the moment. I have to go back to ES. 47.14. So you look at these and say, can it get there? Well, sure, it could. And how far is that? Is there anything in the way to stop it? If the market started, buyers started stepping up here, this price is going nowhere. I think it could get there. So I'm not too fond of that idea. Then 46.60, not too far away either. So the premiums, even getting as far away as possible, is getting tighter. And this bar here would lead me to believe, to some degree, that the 46.60 could be okay. But I'm not all that confident, because things are rather tight here. I can't make a decision here. I mean, if this is too close, and any weakness, not even that much weakness, if it started to, pick up some steam, it could easily go there, and it wouldn't be such a terrible thing. I mean, from a day-to-day point of view, see, yesterday's bar is 46.72, so you do have a little bit of support. But if that goes, it's going to be there in the blink of an eye, because this bar already took out all these lows. So this is all you have, is Thursday's low. And below that, it's going to hit the 20 MA probably as fast as you blink. And it's up to you. That's the level. Right now, things are up a little bit, so you got to go through Friday's low. Just go back to. Yeah, I think if you're willing to consider doing it, either side, and since this is grinding higher, the lower, if you were going to do 2 contracts, do 1. Best I can say, because things are getting too tight here. Okay. Now, Russell, exactly what I was thinking it should do, looking at this over the weekend. This is a terrible mess of an hourly chart. It's not tight. It's whipping. It's going back and forth. But the depth of this retracement is about as far as we want to see it go. And this already closed more than halfway into the wide range bar. What we like to see is to stay at the top. And the opens and closes stay in the top half. You can get dips down there, but we don't want to see closes down there. So anyway, we've got this lower high, lower low. I think I talked about this pattern. a week or so ago, where you get this momentum move and you get the lower high, lower low, and then reversal. And this is what's developing here. And I like the size of that 5-minute bar coming off of the low. And it's a power bar. We know power bars create voids, meaning there's nothing to stop it from going all the way back down. So we need a little time to wait and see how buyers want to step up on the dip, if they can hold this as a green bar. But this is shaping up as an opportunity to get long the Russell 2000 with this pattern. It's a bullish pattern, power bar, lower high, lower low. Starting to make the turn here. Obviously, it's early. We don't know that the turn isn't solidified yet, because this could be a topping tail bar. And as long as it doesn't dip down a whole lot more, even if it's a topping tail bar, if tomorrow opens up lower and this turns up, I like it even better. Right now, waiting mode to see if this can actually close green. This continues to march higher. At some point, money's going to rotate out of that. Remember what we've been talking about? Well, if you think it's too high, okay. You want to short it? Don't be stupid. At least let it show some weakness of breaking and closing below one prior day's low. And that ain't happened yet. So it's continuing to march higher. We don't know how high it'll go. You could look at whole numbers and say, hey, 17,000 might be the next stop. Just like we said, hey, at this point, 16,000, it's a whole number. 16,500, they're whole numbers. These fib extensions and clouds and all of that hocus pocus and Elliott waves and Gartleys and butterflies, best left them to the dark side to play with. Just follow it bar by bar and see when you get a turn day. No point in us predicting the exact high, because that might be interesting for selling newsletters and holy grails and all that, but we just follow it bar by bar and see when it eventually gets a turn day. And 4 transports. We'll get back to the gold and oil and all of that in a second. Having that correction, normal type of price action, prices pull back. And this is your lower high, lower low pattern. In doing that, it's coming down to support. We'll see if these airlines start to perk up, and these cruise lines and so on. And what I want to show you, I talked about this in the newsletter. It's still far off before something's going to happen, but this, keep an eye on this. I told you about this yield curve and the way this 5 years going up, and it's pushing up to new highs. While we've got the 10 years up here a little bit, but look at you see the trends, how this is just flip-flopping sideways and the shorter term is rallying like that. Now you look at the 30-year and it's just, messy and doing nothing. What's happening is if you create yield curves from those short and intermediate term and long-term things, you see that they're tightening up. And they're moving down towards zero. They're not there yet. But this is something that if it continues this way, it's going to be an issue. Greg, you have any SPX estimates? Some people are calling for 48.50. No, those are the people with very highly polished crystal balls that come up with exact numbers for tops like that. I mean, look, I don't know. That probably comes from drawing, lines and projecting them into the future and Elliott wave counts and who knows what else. Who cares what it is, Joe? Who cares what it is? They did their fib extensions of who the hell knows what. It's a whole number. Let's see if it clears these highs. And if it does, go long and see how long it takes. And then start trailing prior bars lows. We keep it simple, stupid. We leave the predicting up to those with the fancy tools and squiggly lines that can do it all. Okay, internals, kind of weird scenario here. This is the minefield that's going on out there right now. We look at these markets and see them going up, and you see this breadth internal that you see this going like that, and yet this is moving down. So this wasn't so bad, but now this is continues to move up, and you got the NASDAQ going up, and this thing is almost down here. So there is some internal destruction going on. And one of the things that if you go and look at the software sector, which you think, oh, Microsoft doing fantastic. We'll go look inside the ETF XW, SXW, and look at some of those stocks that are in there. Now, there's an ETF that is moving lower, and there are stocks in there that are getting decimated. And so, well, this internal market gauge tells us what's going on under the hood. You have to go out there and look and find out what is creating this. So while we have Apple and Amazon and Google, Facebook start bringing up the rear last week. Same old story this year, limited amount of stocks. And then you got the other stocks out there like PayPal and Peloton and some of the other winners and Roku that are all falling apart now. So yes, Tim, newsletters. Well, no, not all newsletters. We don't put the ETF letter on sale since it's so inexpensive. And the weekly options trader is not, it's so inexpensive. People love it. It's dirt cheap. But the advisory letter, the annual, is on sale big time. So many people sign up for the annual. Those will go out later this week. Maybe when Dan is talking, I'll find it for you. But anyway, you see the internals are already down to a bullish level. Sentiment is still up here at a very bearish level, but we need them to agree to get a signal. So where this is suggests to me that those underperformers like the Russell, the transports, maybe they can bring up the rear and help this come up here a little bit. So nothing here, right? I guess the bigger takeaway here is that there's really nothing here to suggest that the broader markets are going to start dropping in any big way. They're consolidating their gains. Look, well, this is the kind of stuff that's happening under the hood, right? Oil stocks going down. Right? Nasty break last week in computer software. There's plenty that went sideways or pulled back. Consumer staples went up to the prior high. So there was some buying there, but overall it was all about tech, right? What's tech? X. Look at it every day. What's tech? I mean, the ARK funds look like they might roll over. Anyway, it's what's underperformed, like mid caps and Russell, where I think the money could be made with the ones that have underperformed all year, and they can bring up the rear. So silver just continues to chop lower. See it dropping there pre-market. Gold coming in again. I guess the dollar's probably rallying. Where do we have? It's starting to push up above the highs. So pick the right things, right, as best you can, and have your stop in place. Don't fall in love and don't change time frames If something isn't working out, just kill it and move on. We can see oil coming in a whole bunch more. And, Bitcoin is stabilizing on this support for now. We'll see. It'll take a little time for it to. There is a symbol for it, FEDUC. Depends on your platform. You just look up McClellan oscillator in your platform. Yeah. All yours, Dan.
Good morning. Thanksgiving, shortened week, so expect lighter volume. And I think, holiday weeks, I think traditionally are just kind of positive spin to it also. You can look at the almanac. So spiders and IWM gave back 100% of this pre-market pop, well, whatever it started. So yeah, we'll start out slow here today. We have one problem child and one gift of opens, and then everything else is fine. And this Riven, we did a put spread on a 180 reversal. It's gapping down here to the prior lows. I sent out a text to move stop, compromise, 15-minute low. I'll keep an eye on it. But a gift that we have is Vantage. It's being bought out here. We're long the stock. It was a beautiful, 1, 2, 3 on the weekly. So I just said, just sell it to open or pre-market. It really doesn't matter anywhere around here. The buyout is supposedly at 21 bucks. And, the reason something doesn't gap right to the buyout amount is there's always the risk of it falling apart. So that's why. But in my opinion, there's no reason to stick around. Facebook, we have a put spread that's gapping up 4 bucks. Apple remains strong. Look at that. Now see, this is a good example. It's way too extended on the daily for a swing, but look at this power 15-minute chart. So you get a whatever time frame you're trading, 515, nothing wrong with that. SQM, one of my gappers here, 70 bucks. Well, it's actually gapping too much now. When it was gapping this morning, see the 68. See right to the high end of all this mess. We'll come back to it. ISPC, 11 bucks. Wow, I don't know what's going on there. The gap's too big. This Aster is a space stock, so it's having a big gap here. We'll come back to it. Bottom right. Let's see. I put twist here. Gap into 104. That has room to 100. So if this can't bounce, let's keep an eye on that for day trade short. AUR gap and bearish gap down about right there. You can see on the 15-minute chart, still has room to fall. That could be a day trade short if it can't bounce. Cisco had positive mention, and Barron's sure not bouncing much. Another positive Barron's was this LCII. Put that in a window. We put that in our, I think it's recreational. I think they make parts for boats and so forth, recreational, and the chart supports it. It's daily, weekly, monthly. FMA, I don't know if this was earnings or what, but I don't see anything to do there. This is a bearish gap down. 92.80, way down here. Cap's too big. Something like that, you just gotta, I don't know if the buyers are gonna step up or if it's gonna keep going. AVYA, big price void here, gap of 19. The gap's too big. Now, see, this would be wonderful if it was just gapping right over yesterday Friday's high, over this entire tight consolidation here, because then it's the start of the move of your price void. We'll come back to you. SR, I see nothing. Bios, you know, we'll see if it can turn here. It's still kind of powered down, but it's, yeah, the monthly looks questionable, and weekly, I don't know. Lack, that was a beautiful close on a Friday. I was watching that for 1, 2, 3, but it's gapping up here again. XLRE, if it can get over last week's high, looks higher. DGX, you got bull 1, 2, 3. Shopping around here with a price void. Hey, Robert. All right, a couple of our that were in the weekend letter are gapping over it. JKS, so that's fine. 5-minute high. White House, 5-minute high. GME, now that one was a put spread, so that's fine if you can get filled. And LCII. So these are all fine 5-minute high. So now I will send an alarm for that. And then on GME, I'm just going to say good to go if filled, because we're only going to get filled on a pullback. Plug, yeah, plug looks higher. I remember, Janet, I've looked at that many times with you. Ever since this 200, I remember talking about this with you. And I gave it a target of 50 to 55, but it, yeah, still looks good. So I wonder, this Riven is electric cars, and it's not acting right at all. But look at Tesla. Wow, Tesla, 100% retracement of that, the red bar now. SEG alarm. You know, that looks so good. SEG is good to go. You don't need to wait 5 minutes. That looks good. And those two we found in the solar sector last week, JKS and SEG. So yeah, look at TAN. TAN looks fantastic. So TAN, no reason to wait 5 minutes either. The Q's just like a rock. That is